let us see what is the significance of agreement of trial balance. It is important for an accountant that the trial balance should tally. Normally, a tallied trial balance means both the debit and the credit entries have been made correctly for each transaction. However, as stated earlier, the agreement of trial balance is not an absolute proof of accuracy of accounting records. A tallied trial balance only proves to a certain extent that the posting to the ledger is arithmetically correct, but it does not guarantee that the entry itself is correct. There can be errors which affect the equality of debit and credit, and there can be errors which do not affect the equality of debit and credit. Some common errors include the following: error in totaling of debit and credit balances in the trial balance, error in totaling of subsidiary books, error in posting of the total subsidiary book, error in showing accounts balance in wrong column of the trial balance or in the wrong amount, omission in showing an account balances in the trial balance, and error in the calculation of ledger account balances, and error while posting a journal entry. A journal entry may not have been posted properly to the ledger, that is, posting made either with wrong amount or on the wrong side of the account or in the wrong account. Error in recording a transaction in the journal, making a reverse entry, that is, account to be debited is credited and amount to be credited is debited, or an entry with wrong amount. Error in recording a transaction in subsidiary book with wrong name or wrong amount. Then we have classification of errors. So when coming to the classification of errors, keeping in view the nature of errors, all the errors can be classified into the following 4 categories. So one is errors of commission, and another is errors of omission, and the next is errors of principle and compensating errors. When coming to the first one, errors of commission. These are the errors which are committed due to wrong posting of transactions, wrong totaling or balancing of the accounts, or wrong casting of the subsidiary books, or wrong recording of amount in the books of original entry, etc. For example, Raj Hans traders paid rupees 25,000 to Preetal traders as a supplier of the goods. This transaction was correctly recorded in the cash book. While posting to the ledger, Preetpal's account was debited with rupees 2,500 only. This constitutes an error of commission. Such an error by definition is of clerical nature, and most of the errors of the commission affects in the trial balance. Then we have error of omission. So when coming to the errors of omission, may be committed at the time of recording the transaction in the books of original entry or while posting to the ledger. There can be of 2 types. One is error of complete omission and another is error of partial omission. When a transaction is completely omitted from the recording in the books of original record, it is an error of complete omission. For example, credit sales to Mohan rupees 10,000 not entered in the sales book. When the recording of transaction is partly omitted from the books, it is an error of partially omission. If in the above example, credit sales has been duly recorded in the sales book, but the posting from the sales book to the Mohan account has not been made, it would be an error of partial omission. Then we have error of principle. So when coming to the error of principle, accounting entries are recorded as per the general accepted accounting principle. If any of these principles are violated or ignored, error resulting for such violation are known as error of principle. An error of principle may occur due to the incorrect classification of expenditure or receipts between capital and revenue. This is very important because it will have an impact on the financial statement. It may be lead to under or overstating of income or asset or liability, etc. For example, amount spent on addition to the building should be treated as capital expenditure and must be debited to the asset account. Instead, if this is amount is debited to maintenance and repairs amount, it has been treated as a revenue expense. This is an error of principle. Similarly, if a credit purchase of machinery is recorded in the purchase book instead of journal proper, or rent paid to the landlord is recorded in the cash book as a payment to landlord, these errors of principle, these errors do not affect the trial balance. Then we have compensating errors. When two or more errors are committed in such a way that the net effect of these errors on the debit and credit of account is nil, such errors are called compensating errors. Such errors do not affect the tallying of the trial balance. For example, if purchases book has been overcast by rupees 10,000, resulting in excess debit of rupees 10,000 in purchases account, and sales return book is undercashed by 10,000, resulting in short debit to sales return account. In a case of two errors compensating each other effect, one plus is set off by the other minus. So one addition was set off by the another subtraction. The net effect of these two errors is nil, and so they do not affect the agreement of the trial balance. The concept called rectification of errors affecting trial balance. So here the error which affect only one account can be rectified by giving an explanatory note in the account affected, or by recording a journal entry with the help of suspense account. Suspense account is explained later in this chapter. Examples of such errors are error of casting, error of carrying forward, error of balancing, error of posting to correct account but with the wrong amount, error of posting to the correct account but with the wrong side, and posting to the wrong side with the wrong amount, or omitting the show on account in the trial balance. An error in the book of original entry, if discovered before it is posted to the ledger, may be corrected by crossing out the wrong amount by a single line and writing the correct amount above the crossed amount and initialing it. An error is an amount posted to the correct ledger account may also be corrected in a similar way, or by making an additional posting of the difference in an amount and giving an explanatory note in the particular column. But error should never be corrected by erasing or overwriting, reduces the authenticity of accounting records and give an impression that something is being concealed. A better way therefore is by noting the correction on the appropriate side for neutralizing the effect of the error. Take for example a case where Shyam's accounts were credited short by rupees 190. This will be rectified by an additional entry of rupees 190 on the credit side of this account as follows. The ledger account format will be as discussed in the previous sessions: date particular, journal folio amount, date particular, journal folio amount. So this will be rectified in the credit side. So the entry will be difference in amount posted short on, then with the amount will be 190. So take another example. Purchase book was undercashed by rupees 1000. The effect of this entry is on purchase account, which is debit side, where the total of purchase book is posted. So this will be posted as, the format remains the same again, we will be having date particulars amount and again date particulars amount. Even we can show the journal folio column in this. So the entry will be undercasting purchases book and the amount will be considered as 1000. So the next concept we have is suspense account. Even if the trial balance does not tally due to the existence of one side error, accountant has to carry forward this accounting process by preparing financial statement. The accountant tallies his trial balance by putting the difference on shorter side as suspense account. The process of opening of suspense account can be understood with the help of the following example. Consider the sales book of an organization where we have date invoice number and name of the customer, then ledger folio and amount. So we have the following traders names here. One is Ashok Trader and the amount is 20,000. Then Bimal Services, amount 10,000. Then again Chopra 5,000. Then we have Divakar and Sons 15,000. So the total sales book total we have is 50,000. If sales to Divakar and Sons were not posted to his account, ledger will show the following position. So now for each trader we are going to prepare a ledger account, and we have assumed that Divakar account has been not shown. So when coming to the Ashok traders, we are going to show the sales in the debit side, where the format will be of ledger account, date particular, journal folio amount and date particular, journal folio amount. So now sales was shown in the debit side, sales 20,000 in the amount column. Since we don't have any sales return or any entry in the credit side, this account will be closed. Same total both the side, then balance carried down and balance brought down. Credit side balance carried down, then again debit side balance brought down. Then we have another customer name which is Bimal Services. So when coming to the Bimal Services, again account will be the same and sales will be shown in the debit side. So sales 10,000, then again balance carried on and balance brought down, same amount. Then another customer we have Chopra. Then again the format remains the same, where we have sales of rupees 5,000 which will be shown in the debit side. Then we are going to make the total, then again balance carried on and balance brought down of rupees 5,000. Then finally we are going to prepare the sales account, where we are going to take the total amount of the sales account or total amount of the sales journal. So again the format will be of the ledger, where in the credit side we are going to show sundries as per the cash book. The amount will be 50,000. So here the amount was, when coming to the Divakar trader, that particular account itself is omitted here, even though the sales account is showing the total amount of the sales journal, which is 50,000 in the credit side. The trial balance when prepared on the basis of the above balances will not tally. Its credit column total will be amount of rupees 50,000 and debit column total will be 35,000. The trial balance would differ with the 15,000. This difference will be temporarily put to the suspense account and trial balance will be made to agree in the ledger. In the above case, difference in trial balance has arisen due to the one side error, omission of posting to Divakar's and Sons account. In real situation, there can be many other such one side errors which cause a difference in trial balance and thus result in opening of suspense account. Till the errors affecting agreement of trial balance are not located, it is not possible to rectify them and tally the trial balance in such a situation is shown in the suspense account. So here make the total of debit side and credit column and proceed further with the accounting process. When the errors are located and the specific amount and the amounts involved are identified, the amounts are transferred from suspense account to the relevant account, thereby closing the suspense account. Thus, suspense account is not placed in any particular category of account and is just a temporary phenomenon. While rectifying one-side errors using suspense account, the following steps are taken. So 1. Identify the account affected due to error and ascertain the amount of excess debit or credit or short debit or credit in the affected account. And the third is, if the error has resulted in excess debit or short credit in the affected amount, credit the account with the amount of excess debit or short credit. If the error has resulted in excess credit or short debit in the affected account, debit the account with the amount of excess credit or short credit. Then complete the journal entry by debiting or crediting the suspense account as another account affected otherwise.